If you're over 60 and you've been putting off opening that envelope from the Social Security Administration, stop what you're doing right now, because what's inside it could change how much money lands in your bank account every single month for the rest of your life. And I'm going to walk you through exactly what it means, what to check first, and the one mistake that costs seniors real money every year. So stay with me to the very end, because the last part of this video could be the difference between a bigger check and a smaller one. Every year, millions of seniors get a letter or a notice from the Social Security Administration. And every year, a huge number of those letters get set aside on the kitchen counter, tucked into a drawer, or tossed out without a second look. I get it. These letters look official, a little intimidating, and honestly kind of boring at first glance. But this year, more than almost any year in recent memory, that letter actually matters, because 2026 brought some of the biggest changes to Social Security we've seen in a long time, and if you don't know what's in that notice, you could be leaving money on the table, or worse, you could miss something that affects your benefits down the road. So today, I want to walk you through, in plain English, no confusing jargon, exactly what changed, why it changed, and what you need to do about it. Let's start with the most obvious one, because almost everyone receiving benefits has already noticed a slightly bigger deposit this year. Social Security benefits went up by 2.8% starting in January of 2026. That's the annual cost of living adjustment, or COLA, that's designed to help your check keep pace with rising prices. To put that in real numbers, the average retirement benefit rose by about $56 a month, taking the typical payment from around $2,015 up to roughly $2,071. Now, $56 might not sound life-changing, but over a full year that adds up to well over $600 extra dollars. And it applies not just to retirement benefits, but to survivor benefits, disability benefits, and supplemental security income as well. If you have a My Social Security account online, you should have already seen your personalized COLA notice appear in your message center back in late November, and if you opted for paper mail instead, that notice would have arrived by letter around the same time. This is one of the notices people tend to ignore because they assume it's just routine, but it's worth actually reading because it tells you your exact new benefit amount and confirms your address and payment information are correct. Now here's where things get a little more complicated, and this is the part a lot of seniors miss. That 2.8% increase doesn't automatically mean 2.8% more money in your pocket after expenses, because Medicare premiums went up too, and for most people on Medicare, that premium is deducted directly from your Social Security check before it ever reaches your bank account. The standard Medicare Part B premium climbed from $185 a month in 2025 to just over $201 a month in 2026, which is roughly a 9.5% jump. That means a meaningful chunk of your COLA increase is essentially being absorbed by higher healthcare premiums before you even see it. This is exactly why financial advocates for older Americans have been vocal about the COLA not going far enough to keep up with real costs, particularly healthcare. So when you open that Social Security notice, don't just glance at the new total and feel good about it. Compare it to last year's amount and do the subtraction yourself, factoring in your Medicare premium, so you know your true take-home change. Next, let's talk about something that could be a genuinely big deal if it applies to you. And I want you to really pay attention to this section because it involves potentially thousands of dollars in back pay. If you or your spouse worked in a public sector job, something like teaching, firefighting, police work, or certain state and local government positions where you didn't pay into Social Security through that job, you may have been affected for decades by two rules called the Windfall Elimination Provision and the Government Pension Offset. These rules used to reduce, sometimes drastically, the Social Security benefits of people who also received a pension from a job that didn't pay Social Security taxes. In some cases, this cut benefits by hundreds of dollars a month. And for some spouses and widows or widowers, it reduced their spousal or survivor benefit all the way down to nothing. In January of 2025, a law called the Social Security Fairness Act eliminated both of these provisions entirely. That means if this applied to you, your benefit should have already been recalculated upward, and you may be entitled to a retroactive lump sum payment covering benefits going back to January of 2024. The Social Security Administration says it completed the bulk of this massive payment rollout, more than $17 billion in retroactive payments, ahead of schedule. But here's the catch, and this is important. Not everyone has received the full amount they're owed. Some surviving or divorced spouses have only received partial retroactive payments, and a group of senators has actually written directly to the head of the Social Security Administration, asking the agency to review its policies and make sure protected spouses get the full amount they're entitled to. So if you or someone in your family worked in public service and had a pension from a job outside the Social Security system, do not assume this has been handled automatically. Log into your My Social Security account, compare your current monthly benefit to what you were receiving before January of 2025, and if the number doesn't look right, or if you never even filed for a spousal or survivor benefit because you assumed it would be reduced to zero anyway, call Social Security directly and ask them to review your case. This single check could put real money back in your pocket. There's also a tax change worth knowing about, especially if you're 65 or older. As part of a broader piece of legislation passed in the summer of 2025, seniors 65 and up can now claim an additional $6,000 deduction on their federal taxes, $12,000 if you're married and both spouses qualify, on top of the standard deductions seniors already received. This deduction is available for tax years 2025 through 2028, and for a lot of retirees, it can significantly reduce or even fully eliminate the federal income tax owed on their Social Security benefits. This isn't something Social Security mails you directly. It's a tax provision you'll want to make sure your tax preparer or tax software is applying correctly. So when you sit down to do your taxes this year, specifically ask whether this new senior deduction has been included. Because if it's overlooked, you could end up paying more than you actually owe. If you're still working while collecting Social Security, and you haven't yet reached your full retirement age, there's another change you need to know about, because it affects how much of your benefit you actually get to keep. In 2026, the earnings limit rose to $24,480 a year for people who are below full retirement age for the entire year. What that means is if you earn more than that amount from work, Social Security will withhold $1 in benefits for every $2 you earn above the limit. If you're reaching full retirement age sometime during 2026, the limit is higher, $65,160, and the withholding is a little more forgiving, $1 withheld for every $3 earned above that threshold. And once you actually hit full retirement age, this limit disappears completely, meaning you can earn any amount of income without any reduction to your Social Security benefit at all. A lot of people misunderstand this rule and think that money withheld is simply lost forever, but that's not true. Once you reach full retirement age, Social Security recalculates your benefit to credit you back for those withheld months, so it's a temporary reduction, not a permanent one, but it's still something you need to plan around if you're budgeting carefully. Full retirement age itself has also finished its long, gradual climb. If you were born in 1959, your full retirement age is 66 and 10 months. And if you were born in 1960 or later, your full retirement age is now a flat 67, which completes a phase in that Congress actually started back in 1983. This matters because claiming benefits early as 62, still permanently reduces your monthly check by around 30% compared to waiting for full retirement age, and if you delay claiming beyond full retirement age, your benefit continues growing by about 8% per year, all the way up to age 70. So the age at which you choose to claim remains one of the single biggest decisions affecting your lifetime benefit amount, and it's worth revisiting that decision if your circumstances have changed. Now, I want to shift gears for a moment and talk about something just as important as any of these dollar figures, and that's protecting yourself from scams, because sadly, seniors are targeted more than any other group when it comes to Social Security fraud. Scammers know that letters about benefit changes make people anxious, and anxious people are more likely to act quickly without thinking things through. So here is the golden rule, straight from the Social Security Administration itself. No government agency and no reputable company will ever call, text, or email you demanding personal information or asking you to pay a fee through wire transfer or gift cards. If you get a call claiming to be from Social Security threatening to suspend your benefits unless you act immediately, that is not real. Real Social Security correspondence comes through the mail or through your official My Social Security online account, and it never demands immediate payment or threatens arrest. If you're ever unsure whether something is legitimate, hang up, log into your account directly at ssa.gov, or call the Social Security Administration's official number yourself rather than using any number provided in a suspicious message. So here's what I want you to actually do after watching this video. First, if you have not already created a My Social Security account, go set one up because it gives you instant access to your COLA notices, your benefit statements, your earnings record, and it lets you catch errors and updates faster than waiting for mail. Second, if you or your spouse ever worked a public sector job with a pension, double-check your current benefit amount against what you were receiving before January of 2025, and call Social Security if the numbers don't add up. Third, when you file your taxes this year, make sure that new $6,000 senior deduction is being applied if you qualify. And finally, treat every unexpected phone call or email about your benefits with healthy suspicion, because the real threat to your Social Security isn't a letter, it's a con artist pretending to send you one. Social Security can feel like a maze of rules, numbers, and paperwork, but understanding even just these few changes can genuinely put more money in your pocket or protect the money you've already earned. If this video helped clarify what's actually going on with your benefits this year, that's exactly why I make these videos, to cut through the confusion and give you straight answers you can actually use. If you found this helpful, do yourself a favor and hit that subscribe button right now, because Social Security rules change more often than most people realize, and I break down every single update the moment it happens, in plain, simple language, with no confusing jargon and no wasted time. Turn on notifications too so you never miss a video that could put more money in your pocket or protect you from a costly mistake. This channel exists to help you and your family keep more of what you've earned, and the best way to make sure you catch every update as soon as it drops is to subscribe now, tap that bell, and join a community of viewers who refuse to let Social Security surprises catch them off guard.